Well, I think a couple of reasons, primarily focused on earnings at this point. The S&P 500 technology sector is expected to post a 32.6% year-on-year increase, which is about half of what the market on the whole is expected to do. S&P is expected to have seen a 72% increase in earnings. Yet on a year-to-date price basis, the tech sector has actually outperformed the S&P 500. So I think possibly investors are locking in some of their profits. Maybe the old adage of buy on rumors, sell on news is what is taking place. The second aspect, I think, is the worry over Chinese regulation and whether that could adversely affect technology stocks in terms of their marketing to the Chinese marketplace, et cetera. So I think also the market has just gone, has skyrocketed over the past several weeks. And again, I think investors are saying maybe it's time to take some profits. Certainly the COVID-19 Delta variant is something that is gaining strength and causing more concerns. I think that the CDC advising people to wear masks indoors and outdoors, even if you have been vaccinated, is another warning that things could get worse before they get better. Because of that, I think the Fed is less likely to embrace a very aggressive stance. Even without the Delta variant, I did not expect the Fed to do anything aggressive at tomorrow's meeting conclusion, press conference, et cetera. I think at best they're gearing up for the Jackson Hole meeting in August and might hint at quantitative easing, et cetera, at the September meeting, but not enact it until the end of 2020. So my feeling is that the Delta variant will probably end up causing the Fed to sound more dovish at this point rather than hawkish. Well, I think that companies that downgrade their economic outlooks, the first thing you have to do is find out where they thought the growth was to begin with and what have they brought it down to. Our economists think that we are going to see a 6.2% year-on-year gain in real GDP in the U.S. for 2020, and then a 4.5% gain for 2021. There have been many companies on the street that have much higher numbers than that, and so possibly when they bring them down, they're really just sort of coming back in line with the street as a whole. I think it's too soon to tell what kind of an impact there will be from the Delta variant, but obviously that is something that will have to be monitored. And if we do end up seeing people more reluctant to go out again because of the CDC recommendations to remask, well, then that could end up having a bit of a slowdown effect on the overall economy. But quite frankly, people have been cooped up for too long, 18 months now, and I think as a result, they'll be very willing to either get the vaccinations, to wear the masks, or to just risk it because they're tired of being cooped up. Well, I think some stay-at-home stocks could end up continuing to do fairly well. Let's face it, technology is a growth sector along with consumer discretionary and communication services. If the Fed is not expected to be overly aggressive with their monetary policy, that likely will keep interest rates lower for longer, and that would benefit the growth sectors of the overall economy. So from a strategic perspective, I mean, our belief is that the Fed will try to maintain the 10-year note around the 2% or less level over the coming year. Our expectation is that the 10-year yield will actually average 1.45% this year and 1.73% next year, which is actually down from earlier projections. So I would tend to say that with such a low interest rate environment, investors probably will want to favor the growth side of the ledger.